I guess we'll start. This is Chris McLaughlin, aka Mystic Forex at traderslaboratory.com, and I want to welcome everybody here today. We have a very special guest that we'll be interviewing today, and he'll be talking to us, and he'll be taking some questions. We have with us today Rob Booker. Rob is a currency trader, a Forex educator, and an author of several books. And he was also a keynote speaker at the International Traders Conference in Barcelona, Spain, and that was in 2008, I believe.
Actually, it was for 4 years in a row from
4 years in a row.
Started in 1876 and ended last year or something.
Up to 1900, okay. So welcome, Rob, and first off, I want to thank you very much for being a guest here today.
Oh, I'm happy to be here, Chris, and I hope that people understand that, I may be the guest today, but if there's ever an opportunity for people here who are listening to come in on a webinar where Chris is the guest talking about what he does, that would be, I'd pay to go to that one. So I'm looking forward to it. I feel like I want to hear from you as much as you might want to hear from me.
Flattery will get you everywhere, Rob. So, okay. Well, I'm going to get right to it here because we're probably going to want to cover a lot of ground.
Sure.
First off, Rob, a lot of people have heard of you, and but how long have you been trading?
I've been trading
and
for.
And the second part is what drew you to it?
Well, I started trading in December of last year. No, just kidding. It's been 10 years now, and what drew me to trading is not so dissimilar to what drew other people to trading. I had a natural inclination toward the financial markets. I enjoy this from an intellectual standpoint. Even on the bad days, I do enjoy it. And then, second of all, I had financial circumstances that were unfavorable at that time in my life. I had contributed to the bankrupting of a technology business together with a college friend of mine, and I needed to make money, and I needed to support my family, and I turned to trading to at first supplement my income, and then replace the income that I would have from some stupid office job that I knew I was going to get fired from eventually anyway.
Okay, well, you say stupid office job. I don't know how many people are aware that you graduated law school,
right,
and were employed as an attorney.
Right.
And most people wouldn't think of that as a stupid office job.
Yeah, most people wouldn't think that I could make it all the way through law school, which is actually true. I made it all the way through. I got my law degree. I just hated it. It disappointed me, and I'm no different. I went into law school very idealistic about what it would be able to allow me to do to help people, and I left thinking there are only two ways to practice law. One is to hate your clients and take their money unethically, and the other one is to just simply take your client's money unethically without an opinion of your client. And it just turned out to be a really big mistake. I had a chance, actually, Chris, during law school, to work at Montgomery Securities. I spent my first summer working for Montgomery Securities in San Francisco out of the Transamerica Pyramid. I thought I was getting a job at the very top of the pyramid in that office that's just shaped like a triangle where you can barely put your shoulders in. And what I actually got was I actually worked out of the bottom floor of that pyramid, and my workspace looked over the garbage dumpsters in the back of the building. But I still look back on that as one of the best opportunities I did not take advantage of. I was there on the day that Netscape went public and the whole office went crazy, and we underwrote together with other firms Netscape, and I was there at the very beginning of the dot-com boom and was offered a chance to stay there and work as an assistant to a trader. And I made one of those boneheaded decisions. I said, no, I'm going to go to law school, and I left, and I went to law school, and the entire investment banking technology boom sort of passed me by while I sat listening to a guy that looked like Detective Sipowicz from NYPD Blue drone on about torts. And just a it was just a mistake to not go in that direction earlier than I did.
Uh-huh. Okay. Well, now back to Forex. Are you self-taught, or did you have a mentor or teacher or coach or anything like that? How did you find your way around?
It's probably not accurate for anybody to say they're self-taught, and I know you'll agree with me as far as that's concerned, that there's this dichotomy or this contradiction that no one can teach you to trade except for you. However, none of us are fully self-aware and often need someone else to make us aware of things that we need to learn or teach ourselves. And so I started off having been introduced to the world of currency trading by a friend, and maybe that's a story for another time. But I didn't initially have anybody feeding me material to learn from. So I read Alexander Elder's excellent book, Trading for a Living, followed that up with I got a book off my bookshelf that I had been given during law school, and it was Point and Figure Charting by Thomas Dorsey. And I self-taught in the sense that I started picking up the books first, and then along the way I joined whatever emerging communities there were, and conversed with traders and spent time with them, and I think those people, and you're included in this, Chris, from even 5 years into it or whatever when I met you, there are people in my trading life who have come along even later in the game who have been my mentor or friend or teacher, despite the fact that the roles were supposedly reversed. And so I started it off on my own, Chris, to answer your question more simply. And then I found myself unable to make progress unless I had somebody helping me identify things about myself that needed to change.
So, in other words, you can't exist in a vacuum. In other words,
Yeah,
basically, you
right.
have to have input,
No man or
output.
woman is an island, and you don't do this on your own, although you're doing it on your own.
Yes, yes.
Yeah, as soon as you find somebody to teach you, you should fire your teacher. I mean, you need to be independent from a certain perspective, but everybody here that's here today has probably benefited in some way from an educator or a teacher or a friend. Um, nobody that's ever done this well was self-taught.
Okay. And how would you classify your trading style? Are you a swing trader, a trader? The trend is your friend. How would you
Oh,
classify your trading style?
well, if you're talking about 2011, I would classify it as unprofitable. That's the first thing. I have had, I'll answer your question for sure, but I've had a very difficult beginning of the year 2011, and there's no secrets with me, and there's no hiding of the truth, and there are explanations for it, and maybe it's the subject for an entire webinar. And that time has ended, and things are good again. But I started off the year it was very difficult beginning of the year. I would classify myself as the type of trader who looks for counter trend opportunities on short-term charts, such as the one we're looking at right now on the New Zealand dollar, US dollar 1 minute, that help me to enter a trade that is congruent with the longer term charts trend. So I'm looking to sell the New Zealand dollar, US dollar, on a move upwards. So I'm looking to sell it counter trend on the 1 minute chart. However, I'm looking at a New Zealand dollar, US dollar that really over the course of this year, if you look at the daily chart going back to October of last year, was really starting a possible downtrend. So I'm looking for short-term moves on the 1 minute and the 5 minute chart that sort of are congruent with and go along with something in the bigger picture. So
Okay.
whether I'm a trend trader or a counter trend trader is really a matter of someone's perspective.
Okay. And how would you set your take profits and stop losses on a setup like this? And is this something at a certain point you would scale out of, or move your stop loss to break even, or something like that?
Well, let me take you through a typical setup here, like what we're looking at right now, and what I'd like to do is perhaps share this concept from start to finish on this chart right here, and maybe start this discussion off of stops and limits by using a concrete example.
Sure.
I believe that the New Zealand dollar, U.S. dollar, over the course from October of last year to the present time, has encountered some difficulty, and there's been a fairly substantial move upward since mid-March, and that move upwards has been from the mid 71s all the way 500 pips higher to 76, where we find ourselves today. And this alone is not an upward trend on the 4-hour on the daily. If you look at on the daily, you could say that this move downward has been the initiation of, or it's been a 1, 2, 3, 4, 5 month move downward. And that's enough for me to say in the longer term chart, we have an argument to be made that this currency pair has started to move downwards, and the upward trend that we saw previously has ended. And so this is a pullback inside
This could be,
of this
this could just be a fib retracement on
right.
before a resumption. Yeah.
Yeah, and this trend line right here, until this is broken, I'm not really going to say that the upward trend is resumed, and we can have a longer discussion about what makes a trend. But I don't have giant expectations or rules as far as if I look on the chart, it's going down, to the left side of the chart, then that's enough for me, and that's the most recent move. So I start with that perspective, and that's going to give me a bias on these short-term charts. As you know, I recently self-published a book called The Wallaby Trade. It's now, since you bought a copy this morning, now there's 2 copies in print. One that I bought, so it doesn't really count, and then one that you bought. And that's the primary method that I'm going to use on these short-term charts to take advantage of something that's a longer-term trend. And I might take as a conceptual explanation, I might take 2 or 3 of these, or even more, and stop out of those before I catch it. And currency trading is an art rather than a science, and as much as we'd like to reduce it to a set of rules, the best thing that those rules can do is improve our size of our average loss to our average win. But as far as win percentage is concerned, we don't really control that. We do control when we cut off our losers, but we don't really control how often we win. There is a guy, his name is Bob, and he lives in Tokyo. He sits in a bubble and he controls the market, and he's God, and we don't know what's going to happen next, but Bob does, and he's out there controlling this. We don't control, even if we have a set of rules with a certain historical performance, we don't control what happens next, and we can go through losing streaks that last longer than we ever expected. And so I will take, Chris, 2 or 3 attempts at a trade sometimes on these short-term charts before I catch one that's a winner. Some of the time that's because I trade too early, and I get excited about an opportunity, and I jump in on it before I really should. And then some of the time it's just pure market mechanics. It's not ready to correct, and there is no set of rules that's going to solve that for me. I mean, there is no magic set of rules. They don't exist. They don't exist unless you know the future, and I don't. So all of that conceptually should make sense to people. If there are questions, Chris, you can interrupt me anytime and be happy to stop.
Well, before we look, I don't see any specific questions here as far as that question goes. But the second part of that question was, is this the type of setup where you would start scaling out of at a certain point, or move your stop to break even, or is this the type of setup you would scale into, or how do you handle the actual trade itself once you have the setup and you've opened the trade?
Okay, well, here's an example of the 5-minute chart of the New Zealand dollar. We know that I kind of have a bias here for the short side, and I'm going to take off some of these indicators that are not essential and clean up the chart a little bit. I've got the candles on my chart. I've got the 62 exponential moving average in red. I have the 144 exponential moving average in light blue. I have the 200 simple moving average in dark blue. I have the 800 simple moving average in black and white. These are the moving averages that comprise the Arizona rules. 62, 144, 200, and 800. I have spoken about these moving averages so frequently and so often that it's become probably pretty boring. I also have the Wallaby indicator, which is free and available at wallaby.me. We'll provide some links at the end of the webinar. I have the Wallaby indicator on my chart as well, and I have the regular stochastic oscillator. These are the elements that go into producing a Wallaby trade. So before we talk about scaling in or stopping out, those are the elements. What I'm looking at here is my bias for the short side. And let's say, for example, I'm looking at taking a sell trade. And so I know that. I'm not really looking for buy trades on this chart. And I look at this chart and I see that the currency pair has risen from left to right. And I can draw a trend line across these two peaks in price. I tend to look for two peaks in price that are also overbought on the regular stochastic oscillator. And then I look to the Wallaby indicator over the same exact stretch of time, and I say, if I pull a trend line across the Wallaby over that same stretch of time, is it rising or is it falling? And if it's falling like it is right here, what you're looking at is a situation where a currency pair is moving upward, but it lacks the momentum, or traders lack the enthusiasm to push this oscillator to a higher level on the right side. So you end up with a currency pair that's rising, but an oscillator that's falling. And not only do you have the Wallaby that's falling, but from left to right you have the regular stochastic oscillator that's falling. And I'd venture to guess that the RSI and the CCI and the CBS and the NBC and the ESPN, I'd guess that those are all doing the same thing here.
Probably the MACD as well, yeah.
Yeah, right. And from time to time, they'll all line up and they'll all show this kind of phenomenon at the same time. However, the Wallaby is three separate stochastic oscillators from three separate charts all laid onto the same time frame. And it will from time to time show this phenomenon when other oscillators do not, and it will from time to time fail to show it when other oscillators do. And it did a better job for me personally. This isn't for everybody, and I'm not trying to sell you anything because it's free. It does a better job for me personally of showing this phenomenon. And what we're looking at here, as you already know, Chris, and all the 78 smart people that are here with us, thank you for coming. This is bearish divergence, a currency pair rising from left to right on price, but falling from left to right on the oscillator. And it is an early warning sign that the currency pair is due for a correction back downward. Now, if I already have a bias to the short side, then I'm already predisposed here, and I've got everything that I wanted. I want to sell this currency pair, and it's bearish divergent, so I've got a setup. The setup is clear now. Price is rising, the oscillator is falling. The entry on this trade, and that's where we're getting to an answer to your question, comes when the oscillator, the regular stochastic oscillator, and I've just highlighted it down here, and I'm going to try to use one of these tools on the webinar software, right here, where we get a negative crossover on the regular stochastic. You could line the candles up with that crossover going straight up and down and see that, you know, these candles right here are the entry for a sell trade. At that moment in time, I'm ready to sell it. I have a bias for the short side, I have the negative bearish divergence, and I have a crossover on the regular stochastic oscillator where the fast line crosses the slower line. The lighter colored line crosses the darker, thicker line, and that's the entry for my trade. And it's as simple as this from there on, Chris, and it's a long way to answer a very simple question. My stop loss goes above the recent highs, or the highest point that the currency pair made before the divergence trade opened, and that is from entry to stop, for example. You get an entry at the close of the candle at 76.18 and a stop of 76.30. So you have a 12 pip stop, and you can add a couple pips in there for the spread. You can have that be a 15 pip stop. There's nothing magical about it. I have noticed that if you want to add 5 or 10 pips to that level, you can often keep yourself out of a spike or whatever else. The profit target on this trade, on a one position, single entry, Chris, so one trade entered, not multiple trades, just one trade entered, the profit target's going to be placed in several different places depending on your desires and history with the currency pair and whatever else. Number one, best performer is simply picking a previous low on this currency pair. And if we were buying, we'd pick a previous high. A previous low on this currency pair finds itself at 75.78. Now that's about 40 points lower than our entry. So a 12 to 15 pip stop and a 40 pip profit target. That's a good 2-to-1 risk to reward ratio. And for those of you that are religiously connected to the Church of Our Lady of the 2-to-1 risk to reward ratio, and you preach about it on Forex Factory, and you get mad at people when their system doesn't produce that, then this ought to give you euphoria of orgasmic proportions, because your stop loss is always going to be about half the size of your profit target on these trades if you pick a previous low. You can also pick the 200 period simple moving average. That's going to be hit more often and more reliably because it's closer. You can also pick the 800 period simple moving average, and that's going to give you a giant profit target. It's going to give you a profit target that often is 5 times larger than your stop loss, but it's not going to win as much of the time because it's harder for a currency pair to travel a further distance than it is to simply travel part of the way and go back to your stop loss and whatever else. At any point in time, Chris, when this trade is open, if the currency pair hits the 200 simple moving average and I have chosen not to exit the trade with a profit, my stop loss doesn't go to break even. It actually goes to the high point. It actually goes to the high point instead of above the high point on this. And what you did is you tightened up your stop as the currency pair moved in your favor. In this instance that we're looking at right here, we had an entry where I identified it right here, and the currency pair then subsequently rose up higher than the highest high, and this trade would have stopped out according to the rules of the Wallaby. And in this case, I have this trade still open, and I'm going to try to share this application with you so you can see it. It's a live account. I'm down $633. I'm down 21 pips. I'm down about the size of my maximum allowable stop loss on this, but my trade size is smaller. I took 3 standard lots instead of 10, so I'm much smaller on my position size, and I can stay in this a little bit longer because of that. Because I'm aware that I'm going to take these trades, and a few times when I take these trades, they're not going to, the first attempt isn't always going to be the best one. So I'm prepared for that when taking these trades. Before I get into what happens next here on this chart, are there any questions or comments or jokes from you, Chris, or anybody else that's here?
No, James, do you have any questions?
Good at the moment.
Okay, no questions yet? Okay.
Oh, hang on a sec. Here we go.
Yeah, James is watching the question.
No, don't worry. There's nothing important right now. Okay.
Yeah, that's great. And if you get a question in there that's ridiculous or even accusatory, I love them. So you just lay it on me. I'm here for the people on the webinar. They're not here for me. So if you have something you want to say,
there's one question that Andy has.
Okay.
If you want to listen to this, he said, "No offense, but pointing out a short and uptrend is not exactly a good example. What do you have to say to that?"
Right, and what I'll say to Andy is, Andy, you win the Mr. Obvious Academy Award of the day, and you either had your hearing aid turned off when we started the webinar, or you simply came in late, and both would be inexcusable. So you should leave. No, Andy, good point. Here you go, Andy. Here's what I said at the beginning when you weren't listening. Trading with the trend for some people is it's like a religion, right, Chris? And if you say to them, "I'm going to take this counter trend trade," they say to you, my savior is first Jesus Christ and second is the trend. And they'll argue with you about it as if, their eternal salvation was on the line. And for those of you, Andy, that find yourselves feeling that way about it, this is for you. This webinar is for you because in this instance, Andy, I am actually doing that. We talked earlier about the fact that in the bigger picture on the daily chart, the New Zealand dollar has come off of these, enormous highs and started correction downward, actually. And this upward movement is a pullback. And so by looking for an opportunity to sell this currency pair on a pullback, we're getting an on-sale price with the bigger picture trend. Now, if all I ever did was sell the currency pair when it made new lows, that would make me a momentum trader, and there's nothing wrong with that. There's absolutely nothing wrong with that. I'm not here to judge you and tell you what way is best to trade with the trend. But if you are an adherent to the first church of the trend, and that's the way you do things, that's the way it's done for you in your crib, then I'm your homie. I mean, this is a pullback in the midst of a larger trend. It's a counter trend move on a short-term chart, but for heaven's sakes, I mean, that's what trend trading is like for a lot of people out there. Is you're asking yourself, how can I best take part in this overall trend at the least expensive price with the tightest stop loss that I can get and the widest profit target that I can get? And that is exactly what I'm talking about doing here, Andy. So you and I, Andy, ought to be really good friends. You say here, well, trading on against this 5-minute trend is unwise. And at some point in time, you have to admit that lots of trend traders trade with an overall trend on a pullback, and that's what this is. And you got to sack up. I mean, you got to strap on your when you get in the closet in the morning, you can pick the fuzzy dice for balls, or you can pick the big brass balls, and you got to pick those out of the closet this morning, because on the 5-minute chart you're going to look like a total yahoo. I mean, you're going to look like an idiot on the 5-minute chart, but in the bigger picture, when you take it into context, you're going to actually be doing something that goes with the larger picture trend. So I'm not here to preach against trend trading. I'm not here to engage in a discussion about what's better. Although, Andy, as a base principle, I'll agree with you. Trading with a bigger picture trend is a smarter idea. Chris, any comments about that from you?
No, that's basically what I do as well. You mentioned something about buying every time you make a new low, and that's something I'm notorious for. I consider sometimes I used to call myself the bottom feeder, because every time the pound yen made a new low, I would buy, and the main reason I would buy was because it was a relatively good risk. If the daily low would be very close, and then if you made another daily low, you had a nice tight stop loss.
Yeah.
And I would do that on a 1-minute chart, and I would do it 3 times, and if I lost all 3 times, then that was it for the day. Tomorrow's another day.
That's interesting.
So.
Guys, we've got some more questions here. If we could just shoot through these.
Yeah, sure.
Somebody just asked about the web address for the indicator. That's going to be made available at the end of the webinar.
Yeah, I'll write it on my chart, so it's right on here on the chart. So
okay, that's great. Yeah.
Watching it could
Perfect.
So what I'm hearing somebody say is that they'd like to stop paying attention to me speaking, and they want to go right down to the good. I think that's awesome. You go ahead and do that.
No.
It's totally free. I don't want anything from you. It's Wallaby Me. It's wallaby.me, and you click on indicators on the right-hand side of the page, and you are more than welcome to that, and look forward to you downloading it and enjoying it, altering it, adjusting it, play with it, change it, whatever you'd like to do with it, and then take the credit for it too. I don't care. So please have it.
That's great. Okay. So Jim was asking, do you tend to use a specific time frame for this method, or is there is it something that you'll use on a variable method depending on which the overall trend is
Right.
in that you're looking
Well,
at?
yeah, I'll tell you what my preference is, and I'd like to, maybe Chris knows this about me. I do a lot of testing before I implement anything live, and even though past performance is not an indication of future results, that you can have the greatest back-tested system in the world and it can still fail, it's all you have to go on. I mean, it's still better than flipping a coin, in my opinion. So with that said, I've done an extraordinary amount of testing on the pound dollar 5-minute, and I'm going to show this testing right now.
Well, that actually ties in quite nicely with another question by Steve, who was saying, what was the process for you
That's great.
coming to be able to have the confidence to put your money in it day to day?
Yeah,
I mean,
and
of
if I
course,
could,
there's more to it, of course, with like risk management and account
Yeah,
management,
but
but
it's a
specifically
totally,
for the
yeah,
technique.
totally fair question, and
and if I could just interject something real quick, I remember you first mentioning the Wallaby setup. I think it was back in 2007,
right.
and this is I guess within the past month or so is the first time that I guess you would say the general public is hearing about it.
Right.
So what's been going on with the Wallaby since 2007 until now? I guess it's just been
Great.
back testing.
Well, I'll answer the question of what pair I like better and what time frame I like best, all within the context of where this came from, which will be a really reasonably quick story. About like 100 years ago, when I did live seminars and traveled the world, and that was part of the way I did business and made money. I found myself in a hotel lobby in Sydney, Australia, and you'll read about this in the book, although you're getting it for free now, so why would you buy the book? But I sat there and I was looking at overbought and oversold conditions and realizing that indicators go overbought and oversold all the time, and it doesn't necessarily mean anything. And in fact, my friend Boris Schlossberg is fond of saying, as is Jennifer too, of saying that just because the RSI is over 70 doesn't mean it's about to correct. It could in fact mean that it's about to go further in the same direction. And I wanted something that was more substantial than one oscillator from one time frame plotted on one chart. And so in TradeStation on my laptop, I overlaid 3 stochastic oscillators from 3 separate time frame charts, all on the same chart. And it gave me a better indication for myself. Like I said, there's nothing magical about this. This isn't the Holy Grail, and this wasn't the cup that Jesus drank from on the day that he, forgave the parable of the trader and the margin call or whatever. I mean, this isn't like that. I mean, it just worked better for me. And it worked better for me across a wide variety of time frames. And then I taught my seminar, and I came out with Adventures of a Currency Trader, which was my first book, and that actually sold 5 copies, so we're not far away from breaking that record with the Wallaby. And I found myself as part of my book tour sitting in Coral Springs, Florida with my friend Roger Harmon, and I brought the Wallaby out, and I was like, hey, I'm here to talk to you about the book and stuff, but I got this Wallaby thing. And Roger and I got to talking about the Wallaby trade, and then, he kind of stuck with it. And then last year, I kind of came back to it when leverage restrictions were put into effect in the United States. And I realized that some of the methods that I used to trade could be improved by earlier entries and tighter stop losses and whatever else. So I pulled the Wallaby back out. And then to bring us full circle and answer the question about, time frames and charts that I liked the best, what I did was I looked at the 5-minute and the 15-minute charts, and I mainly concentrated my efforts on the euro dollar and the pound dollar, not for any particular reason, just because. I just picked them. And I did an extraordinarily large amount of testing on both of these currency pairs. And I realized that, let's see here, on the euro dollar 15-minute chart, I could do, just a ton of testing. I have hundreds of screenshots. They're all available on the blog. I have testing that you can download from the blog. And the 15-minute euro dollar chart, if you ask me what's my favorite time frame in my favorite chart, well, that would probably be it. And I have a large amount of testing done on this currency pair. Remember that past performance is not indicative of future results, and the spreadsheet you're looking at is testing. It's not a record of a live account. Although I post my live account results on my blog, so I don't know why the heck you wouldn't look at that too. And the 15-minute chart worked pretty well. I'm finding also that the 5-minute pound-dollar chart and euro-dollar chart are very appealing as well. And, you know, over the course of, you know, hundreds and hundreds of trades, you know, my winners are about, you know, consistently, you know, 1.5 to 2 times bigger than my losers, and my win percentage is consistently staying within the 55 to 75% range, depending on, you know, if you trade in August, you're just asking for it, you know, and bend over, it's August. You know, a lot of stuff doesn't really work for me very well in August, so it's not a great month. If you take August out, a lot of things work better, and so forth. And there's lots of conversations we can have about this. But I really like the X/USD pairs, Aussie dollar, New Zealand dollar, US dollar, the euro dollar, pound dollar. I love those currency pairs. And the 5-minute charts, I post a lot of 5-minute charts on my Wallaby blog. I post lots and lots of charts there, and I also post those same charts on my Twitter feed. And the Wallaby has its own Twitter account, and you can follow the Wallaby trades at this Twitter address. And I post, you know, sometimes I post 20 charts in a day of trades that are setting up or completed. And so I guess that tells the story, Chris and James, of where it
could
came
you also
from
post
and what I
your
like better.
could you also post the address for your blog?
Yeah, no problem. So I got a lot of places you can go for information, and this is the address of my blog. My blog is largely now, the trades go on the Wallaby site, and at rob.bz is primarily anecdotes and stories over the years. All these traders I've met, I've sat next to hedge fund managers that were losing tons of money and had all kinds of crazy experiences. So my blog, rob.bz, I post my actual results. Like, I actually post live account statements, and I'm pretty accountable and transparent there. And I also tell you stories about, you know, crazy stuff that's going on in the world of trading. So.
Okay, and actually that sort of like ties in. The last question I had actually written down was, why do you share so freely, and why I don't know of anybody that posts their account statement on their blog, or lets anybody see it, for that matter.
Well, it's very rare. I do have friends, Boris and Kathy, that are very transparent as far as their personal trading is concerned, and they've got a track record that people can view. It is rare, and it's embarrassing. You know, I'm the first person to tell you that when I have an embarrassing loss, I don't like to share it. I don't like it, but I have learned over the course of my life that it doesn't matter if it makes me a better trader or not. It's not even about that. And a lot of times I've said, you know, being open and honest makes me a better trader. I want my kids to know that you don't have to hide anything from anybody. You just need to be exactly who you are. And there are very few things in life, very few, that deserve or need to be kept a secret. Most things in life need to be talked about. I mean, and I'm talking about everything, which is why I tell embarrassing stories even on the blog, is I think that there's a part of me that wants to do that. And then second of all, I enjoy teaching. I enjoy this conversation. Everybody who's here today, I care about how they're doing, and I'm a little bit of a narcissist. I probably think that I've got something to share with these people that they're not going to get someplace else. And part of what they're going to get is they're going to see the shitty trades I take. I mean, you're going to see it. I'm not going to hide it from you. I want to hide it from you just like anybody else would, but I need to. I need to make sure that you know it's okay to make a mistake and learn from what I do wrong, and it's perfectly acceptable. Everybody's going to do it. Everybody's going to hold on to a losing trade longer than they should at some point in their trading career. And anybody that tells you differently is God, and you should fall at their feet and worship them. I mean, everybody's going to make something, and I'd rather have you learn it from me. I mean, and if I can go out there and, you know, I've got skin in the game. I manage money. I have an education business that I make money from time to time. I mean, if I've got all this on the line and I can I can admit these embarrassing things, then I think what it tells people is, okay, Rob's got way more people criticizing him and way more people that don't like him or that say bad things about him. And if I'm going to put myself out there, then you at home starting out or at the beginning or the middle stages and finding yourself stuck, you can realize that whatever you've done, I've done it worse. I've been through that, and I still made it through. But I made it through because, you know, I talked openly about it and didn't hide it. And by not hiding it, it makes me less likely to do that stupid thing.
Well, I think I'll just make a point there that, you know, the people that actually do hide these things, well, what is so big that they've got to hide it? You know, that's the fear that I would have about going into something without being able to see the full picture, you know? So at least with people
that's a really nice point, and I think the answer to that is, I manage money, James. So, for example, here's what I have to lose. You know, I manage money, and I announce that 2011 has been a really difficult year for me. It's, you know, who wants to put money into a fund where I've just admitted that the first 2.5 months of the year, I didn't perform as well as I would have liked. I mean, I'm just telling you. I mean, I'm actually telling you exactly the wrong thing. It's like a Toyota dealer telling you, well, for the first 2 months of the year, the wheels have fallen off most of our Sienna vans, but, you know, now we got them fixed. I mean, you're going to lose a sale from time to time for doing that. And if it were all about the sale for me, I would stand to lose some of that. Also, I would stand to lose maybe some pride in the education business. And the education business is notorious for people who want you to think they're doing well because they need to pay their mortgage by selling you stuff. And, you know, in the minute, if you start saying, you know, this stuff isn't working for me, or if I'm not performing well, it's hard for people to separate the person from the system, and then you lose some sales. But the fact of the matter is, and Chris, you know this about me already, I've had a beautiful office, I've had a beautiful house, I've had nice things and a lot of money in the bank, and I've also been divorced and started over financially, and I've had very little. And the fact of the matter is, I don't give a shit about any of that. You know, I don't care. I care about how my kids are doing, but I don't care if you buy something from me or if you think I'm great or not. I want you to do well. I want you to avoid what I went through. I went through some times where I hid, you know, losing trades from people who cared about me for a long time, and it made me no better at this. And if I could admit this stuff, then, geez, you know, everything that happened this year, as far as, you know, being in a difficult spot for me when I was managing money, had nothing to do with this methodology. It was my psychology. You know, I just held on to some things longer than I should have. For heaven's sakes, you know, God's sakes, I've shown you this trade that I was supposed to stop out of earlier today. I mean, it's like, you know, I'm showing it to you, and, you know, at least what I've gotten good at is correcting it by being open about it and talking about it and discussing it, and then I find some solutions for those common psychological problems, and I'm no different than the next guy, except for the fact that I have done extraordinarily well on the whole. You know, in the big picture, I've done really well, and that's really what matters at the end of the day.
Rob, a question that I have for you. I've noticed that traders who I've known, who I've seen, have done an awful lot of testing, analysis, and research. How important would you say that has been to your development of trading strategy and your confidence, going back to what was said before?
That's a nice question. I appreciate that. It's always more fun in a webinar like this to say, oh, here, and the Wallaby is setting up again, and then we get our adrenaline rush and the dopamine release in our brain, and that's what's happening right now. You know, the New Zealand dollar, U.S. dollar is setting up for another go-round here, and I am going to take this trade. And Chris, I'd love to talk to you a little bit about this after the webinar's over and discuss some things with you. But I'll tell you, James, when you speak that language about what role does testing play at the end of the day, you're locking in on the difference maker. And I'll answer it. I'll give you two answers to that question. Number one, what testing does is it disproves theories that I have and keeps me from trading them. So I have spent thousands of hours. I've probably spent 10,000 hours testing over the last 10 years. And I've spent thousands of hours testing methods that don't work. Making a hypothesis.
Method, right?
Yeah, putting it through the scientific process and then realizing it doesn't work. Now, I get attached to things when I spend time on them. The second thing, though, is interesting. When I do statistical research or testing, like that I've got going right here on this spreadsheet right here, there's a calming effect that this has on me. And if I do 20 to 30 minutes of this a day, there's a calming effect that takes place when I take this New Zealand dollar, U.S. dollar trade that has nothing to do with past performance and confidence. There's a calming effect that says, and it doesn't even make me wait for the trade. It's not even about all that stuff. There's something that happens when I take the time to do some analysis, and I go into, I become aware, I don't miss as many trades, and there's something inexplicable and very difficult to articulate.
Meditation for a trader, right?
Yeah, and I'm way into that. Yeah, I'm very much a fan of thoughtful testing and patient testing, and then very quick decision making when the chart's in front of you. And I find that by being patient in the testing phase, I can be more of a hunter that pounces on the kill in the live trading. And it doesn't have anything to do with confidence as much as it does have to do with, actually, James, I can't describe it. It just makes me a better trader. And I think that intangible aspect to analysis, people think, oh, the analysis is going to teach me how to trade. And that's part of it, but it's not the bigger part of it. The testing.
I mean, how many people know about divergence? People know about this kind of thing, but what makes a difference?
Right. I get criticized a lot by, the fat, sweaty guy drinking Jolt at his computer, switching between one monitor on World of Warcraft and the other monitor on, the quadratic equation, and the other monitor on, how to get laid even though you don't know how to dress or talk to women, or whatever. And I get a lot of comments from that person who says, boy, you're teaching the obvious and charging for it. And I get a lot of that, and over the years what I've tried to do is look at that person and say, what can I learn from that person? And first of all, what I learn is stay off the Jolt Cola and the World of Warcraft and bathe. First of all, don't ever turn out like that angry, bitter person. Second of all, you've got a point. It's difficult to charge for something that people ought to be able to figure out on their own, and I accept that. And so today's webinar is free, and the Wallaby indicator is free, and I'm not above criticism. I take every criticism that people make, and I really it affects me, and I listen to it, and as difficult as it is sometimes, and I want to say, James, you're spot on when you say that. How many people know about divergence? And the answer is, a lot of people know about divergence. But the webinar today isn't about Rob is great because he has a system, or Rob is great because he invented something that somebody already invented. Criticism well taken, point taken. I didn't invent the stochastic, and I didn't invent divergence, and I didn't even invent backtesting. But what I'm here today to kind of say is that it's the simple stuff that people overlook so often, like those intangible benefits to testing, or learning from your mistakes, or being transparent. Those are things that most people don't talk about. And even if they do talk about it, at the end of the day, what I'm here to actually say is take any system off the shelf that is out there And if you and I spend 6 months testing it and dedicate the time to conversing about it, and we put the time in, we're going to be able to figure that out. It's not about the system. Making the money is relatively easy. Like finding a system that has a risk to reward, all that kind of stuff. We can find that. That's, you know, that's not your biggest battle. Your biggest battle is inside. Your biggest battle is internal. Your biggest battle is to be honest about the mistakes you make. Your biggest battle is to cut off the loser and really do it for forever now.
Maybe you need to have a look at some of our threads and on the forum. We've got a few great ones at the moment on the inner battle.
Oh, that's great. I'd love to do that. And if you send me an email, I'd love to be a participant in some of that discussion. So
wonderful. Okay, well, I think we're good on the questions for the minute.
Okay,
So
what
I
I'd like to
that
do,
analogy about the hunter pouncing,
yeah,
and you wait for the prey to come by rather than just putting a worm on a hook and throw it into the water and see if anything bites.
yeah, like you know, I've gone through the phases of my life where I wake up in the morning and I open up every chart and I just go, well, what's going on? Where am I going to find a trade today? As if I were a hunter-gatherer and I had to bring, you know, kill back to my family every day or something, and it was going to spoil because I didn't have a refrigerator. And you get this part of your brain that has evolved from those same times, whether you were Adam and Eve on the outside of the garden having to kill for food, or whether you were Cro-Magnon man, or whether you were, you know, whatever you want your creation myth to be. There's a part of that creation myth where we were cast out of safety and put into the lone and dreary wilderness to fend for ourselves, and we have never really forgotten that. And in the back of our minds, we open up those charts on a daily basis, and that part of our brain starts to take over. And it says, I got to find an opportunity. I got to find something. I got to be involved. When in reality, you know, if you recognize what it is that you look for, and you know what time frame you look for it on, and then you schedule your life around being available for that, you end up in an environment that at least solves part of the problem for you. And what I do, Chris, is I build, you know, alerts and alarms, and I build things that help me become aware when something has set up. So it sends me a text, or it says it's divergent now, or whatever else, to help me sort of not open up and just scan for the stuff, but be alerted to when it's there, so I don't find myself just picking through the charts and wasting time and ending up taking a trade too early, which is, you know, just a terrible habit that I have. So
Jared is asking if you sold the New Zealand, the Kiwi dollar again.
I should sell it again. We're at the point now where it's time to sell it again. This candle doesn't even need to close, because I think if we go back in time, we had the crossover on the close of this candle right here. We did. So what I do here, Jared, love the $5 the foot longs, love them. I don't want you to end that anytime soon. So what I'll go in here and I'll do is I'll add. I'm already committed to this partially, so I'll go in here and add. I'll add a bit more to this trade, and what I've done now is my average sell price here is 76.16. Now I want you to know something. I'd rather have stopped out of this trade the first time around and retaken it. That's what I'd rather have done. But you're seeing me for real. You're seeing the real me. The Wallaby trade, if you start taking losses on the 5-minute chart of 30 pips or more, you end up with a risk to reward ratio on your averages that just end up being problematic. And so stopping this out at 15 pips would have been just fine. It would have been the right thing to do. And most of the time, Chris, most of the time I do that. I mean, for January, I made some mistakes in that area, and for the most part, you know, 7 out of 10 or 8 out of 10 times, I'm going to close that and have the stop loss ready to go, and whatever else. And I'm not going to take a giant loss because I held on to a Wallaby trade that I thought was going to come back. You know, the market doesn't really come back very soon sometimes. So,
question, Rob. Mohammed was asking, why would you use? What was the role of the 62 EMA and why 62 and not 60? I think that's a fairly straightforward answer, but he would like to know. So
Okay. About it's probably 6 years ago now, Ben and Greg and Dave and I and others sat in my office on an ongoing basis for about 4 months and built what have become the Arizona rules, which are comprised of these moving averages. And we built a set of methodologies, including some divergence trades, including some trend trades, some counter trend trades. And we built those using these moving averages. And the 62 came out on top. The 60 wouldn't be that much different and would be totally awesome and perfectly acceptable and really wouldn't be problematic, and it wouldn't damage anything that we're doing right here in any significant way. And there is no magic moving average. So if you like the 60 better, that's fantastic. I use these moving averages when they're all crossed over and above each other, when the 200 is above the 800 and the 62 is above the 200, as we are right now. I call that the Phoenix phase of the market and a trending phase. What it's alerting me to right now is that the New Zealand dollar, US dollar on the 5-minute chart is trending upwards. And Wallaby trades, when the 5-minute chart is trading upwards, will go through 1, 2 to 3 times losers. They'll lose 1, 2, or 3 times before we get a winner. And all this testing that I'm doing bears that up. You'll go through a string of losses before it turns around. And what I've been doing is filtering out the trades that don't go with the bigger trend, filtering out the first attempt, and I've been doing some filtering to remove some of these trades that are losers from the mix. But what I end up doing is removing some of the winners from the mix as well. And overall, the system is profitable. So I don't want to make too many tweaks. You know, a lot of people say, well, what can we do to filter out all the bad trades? And it's like, build yourself a freaking time machine, because you can't filter out all the bad trades, but you can control how big the losses are.
That's something that often system builders, automated system builders say, isn't it? Because it's about the robustness of the system. So
Yeah.
you know, if you try and overfit the curve.
Right. There is a guy out there, Chris, who is not our Chris, but another Chris, who has automated this for MetaTrader, and who calls it the Wallabot, and isn't asking for any money or anything else. And he's totally making these results public and automating this methodology with some tweaks of his own. And it's really either a public rejection of or a public acceptance of from a third party in a completely objective manner of what these principles are and whether they can be automated without overfitting and running on separate currency pairs. And the whole discussion that he's having about this is fascinating, and he's got it running with real money. Once again, James, the point would be to take every Wallaby trade, because statistically you only get the full statistical benefit of the methodology if you don't try to second guess these trades. You can't figure this out.
I think we're running out of time, unfortunately. Rob, it's been great. You mentioned about having to re-enter a setup, and just something flashed in my mind. I just haven't seen a surprise box on the pound Swiss, and I can't remember how long, but that was a setup you may have to enter once or twice, but boy, the payoff was like absolutely incredible, and I'd love to see one of those again. And I look for them, but I just haven't seen one. In any event, though, I can't thank you enough for granting us the interview.
Thank you.
Look forward to reading your blog and checking out your Wallaby indicator.
Wonderful.
And
the book on the website, Rob.
Oh yeah,
the book's on the website. It's available for the Kindle. It's available in paperback form. And if you go to Amazon.com, here's a few things that you can do now. You can follow Wallaby Trade on Twitter. You can follow the Wallaby blog at wallaby.me for my results and my performance and maybe a sales pitch for something once a year. You can go to my blog at rob.bz. If the Arizona rules and those moving averages interest you, Jennifer blogs about those and posts charts on her blog about those rules. So there is a resource for that out there in the world. And then here we go. Well, there's my new computer. Oh, I can't wait. Let's go to Amazon. And if you type in the Wallaby Trade, you can find it for Kindle or you can find it in paperback. And would definitely appreciate it. If you've been here in the webinar today and if you've liked what you've heard, please download the book or buy the book online. I'd really appreciate that.
We'll try and get a link into that as well.
Yeah, we have a book section on the website as well that links to Amazon, and we're going to try to get this book in on our site. Okay, so I guess that wraps it up, and I'd be more than happy to talk to you further about that New Zealand setup.
Yeah,
that's not a pair I normally look at.
Great.
But I just loaded a chart, and I want to thank everyone else for attending. It's been great, and this should have been recorded. And as soon as it's ready, we'll be posting it to our site. If you hadn't had a chance to, if you didn't have a chance to be here live, you wouldn't be here. And we say this now anyway. So, Rob, thank you. James, thank you. Mark, thank you. And all the attendees, thank you very much.
Thanks, guys.
And Mark, if you want to shut this down, because I don't know how.
I'll see you later, everybody. And Chris, I'll
Okay,
send
Rob.
you an email.
Take care. Bye-bye.
So, bye.